Good morning, guys, and welcome to your show. Welcome to your market report. Today is Thursday, December 6, 2018. And here's the thing. This market has got a lot of people scared, a lot of people riled and upset. And I just watched it fall 50 points in just the last 2 seconds. It's now 427 points down today. I've been waiting until the market opens to do this report right now. And here's the thing. We are getting really serious. It's starting to get some serious energy and falling. That's because this market lacks support. The Dow Jones and in fact, all the markets, the whole world, it's all the same deal. Credit has expanded. It's fed the markets, fueled the markets up to unbelievable heights. And it lacks support now. The money's been drained out from under it. I mean, it's ready to fall. But here's the thing. We're playing a game of chicken with the Fed. In the old days, they used to have a game they used to play, like back in the 1950s and stuff, where they have two sports cars, cars, hot rods. And they would race head first at each other at high speed, and the first guy to blink and pull over, the other guy would roar on through, and he would get the other guy's car. They called it chicken. And if neither one of them pulled over, they would crash head first, boom, into each other, boom, and kill both guys. They'd get killed. It was a serious game, and they used to seriously play this game. It was called chicken on the highway. For the other guys, one guy would get the other guy's ownerships of the car. The guy that pulled over first would get would lose his car. So anyway, the Fed's playing a game of chicken with the economy, and it's all when the Fed's going to yield to this crisis. Now, I see the first spot where they could yield, and if they yield at the first station. Like we're passing stations on the freeway. You know, a kid, he needs to go to the toilet real bad. He's like, Dad, stop the car, I need to pee. And the father says, oh, there'll be another gas station, and he goes whizzing on by it. Okay? Well, that's the way with this. There'll be another station. The first station's coming up where the Fed could stop and say, okay, we're going to yield, and we're going to give in, and we're going to let you guys have your new quantitative easing and your new accommodative monetary policy, and we're not going to do that quantitative tightening anymore. In fact, we're going to opposite. We're going to start putting money back into the economy. That's them yielding. That's them taking the kid to the gas station to have the pee. But here's the thing. The first station where they could pull over to do that is coming right up. It's when the market falls below 23,000. So it's about 1,500 points. The market has another 1,500 points to go. Where that's the first station where the Fed could say, hey, you know what? We're going to change monetary policy. Or they could wait to the next station when the crisis gets much, much worse and the markets have fell quite a bit further. It's 440 points down now. The markets are falling fast. Actually, it doesn't have to. When I said that, it had to fall 1,500 points. Now it's only got to fall about 1,300 more points for the Fed to pass the first station. There's a very distinct possibility that they could change monetary policy if the market falls another 1,300 or so points. And that's when they're going to start. That's when the Fed's going to start to get scared, to tell you the truth. Well, they're already scared. Let's face it. But that's when they're really going to start to get scared. And they could convene a special meeting, because that's what these academics always do. They call it meetings. Academics always do meetings, endless meetings. Everything they want to do a meeting. Talk. That's what they do. Anyway, let's get right into the markets. Let's open up the charts right here. And let's get this show going. Let's take a look at cryptocurrency, which is really, honest to God, crashing right now. Well, it was. 2 minutes ago, it was crashing. 2 minutes ago, and I just assumed, hey, it's crashing. I come out here, it's not crashing anymore. Suddenly it's went right up, spiking right up. Gee whiz, let's go to the 15-minute and take a look here. Yeah, big green candle. It was a big red candle when I looked just 2 minutes ago. Uh-oh, the green candle's starting to shrink. No, it's going back. No, it's going up. No, it's shrinking. I'm telling you, it's just up and down like a yo-yo. But that's a big red candle there. A green candle, I mean. It's bigger than the red one. But we're going to have to keep a close eye on cryptocurrency. 36.94 right this moment as we speak. Let's take a look at cryptocurrency market capitalizations. And what we're seeing is everything's in the red today, Bitcoin SV is just going nuts. It's up 18% today. That's big time, but most everything else is in the red. Look what you can get Litecoin for today, 28.04. Oh, wow, that's a good price, And Bitcoin 36.85. Okay, so let's take a look at silver now. See what silver's doing. Silver was suffering this morning, but silver's taken off, And she's pushed up, almost made gains equal to what she was suffering. She basically just made a U down and then a horseshoe shape. Back right up again. So she's at $14.44 today for the silver price. Now let's take a look at gold. Let's see what gold's doing. Oh, gold's shooting straight up. So gold's shooting straight up, almost out of its range. It's up 12.43. It's up $6.40. Silver's not following yet, so gold's leading. Gold's leading. We should expect to see silver pop a little bit higher than what it is now because silver will follow gold. And so if gold is going up higher than silver faster, this shows fear trade. Tremendous fear trade today. There's a lot of fear in the market. Now let's take a look at the market. Now she's down 490 points. It was 440 points a minute ago when we were talking. Now it's 493 and still falling. Like I say, the first point where the Fed could actually step in and do something about this is if it falls below this point right here, 23,533. If it makes new low below that point, then the Fed reacted. The Fed blinked. Back in January, when it made this low of 23,533, the Fed actually injected, I think it was $9 billion. And then they used the power of fractional reserve banking to increase that $9 billion by the power of 10. So they actually put $100 billion roughly into the market right there at that point of 23,533. So they reacted, and that's what brought the market back up. It helped to bring the market back up to make this new high. Of course, there was still energy coming in from not from bond buybacks, but from stock buybacks and corporate buybacks and stuff like that, and also tax cuts and everything else that was going on, which brought the market back up to 26,743. And since then we've seen a couple routes in the market, and now today we're seeing this problem. We're up to 485 points down on top of the 800 points the other day. Everybody's starting to get really shaky about this market, but it's got about another 1,000 points or so to drop before it's down below this level right here, which is 23,533. And right now we're at 24,541. So we got 1,000 points left. That's when the Fed could react again because they reacted last time. But when they react prematurely this time, it's going to be different than last time, because what will happen is the dollar is in more jeopardy now, far more jeopardy for the dollar right now. Let's take a look at Sweet Light Crude. It's down to $1.46, 2.76%. That's quite a big drop in the day, 51.43. We're going to have to keep a close eye on Deutsche Bank. I haven't checked it today, but I checked it there yesterday, and Deutsche Bank is not doing good. When Deutsche Bank drops below €6 per share, I'm expecting then the collapse of Deutsche Bank. And I don't think there's anything out there that's going to stop it from doing that. The only question is when. How much further into the future will Deutsche Bank wait before she drops below €6? Now, an awful lot of investors, are thinking to themselves, hey, I'm going to buy some Deutsche Bank. It's pretty cheap right now. The government's going to come in and rescue Deutsche Bank. Deutsche Bank's going to go into some sort of a merger or whatever. I don't see that coming. I don't see any rescue coming. I don't see any mergers coming. I don't see nothing but pain for Deutsche Bank. And for these people that say that Deutsche Bank can't go down because it's too big to fail, you'll find that collateralized damage that comes from Deutsche Bank's derivatives book, first off, is not going to be as bad as people say it's going to be. Even though it's like $55 trillion in nominal value, when you get down to the real root of that, it's not near as much. And the central banks will come in with monetary support to ease that pain for the other banks that are connected to Deutsche Bank through the derivatives. They'll come in and they will help the other banks, but they're not going to help Deutsche Bank. I think Deutsche Bank's going to go down in a ball of flames. It's going to have a tremendous effect on the world economy. It's not going to destroy the world economy, but it's going to be a Lehman moment when this happens. And I can't see it not happening. It's just a matter of how much further in the future we're going to get before Deutsche Bank goes. Take a look at bonds and rates. Gee, we're rattling right through stuff this morning. And we're moving quick through these markets because there's a lot going on, We got bond yields this morning falling. And this shows people are scared. One of the places that they're running to is the dollar and U.S. Treasuries right now because they're scared. I'm going to tell you what. They're getting a little bit scareder now. And they're starting to take a look at, they're sitting up and taking a look at gold. Okay, so you see these treasuries. Look at the sell-off. Look at these treasuries selling. This is not a sell-off in treasuries. Sell-off in treasuries, we see all green arrows. This is buying of treasuries. Look at them. The treasury prices are actually falling, and they're falling pretty quickly, too. We're down 7 basis points on the 10-year, 5 basis points on the 30-year, 9 basis points on the 5-year, 9 basis points on the 2-year, and the 3-month is not that much. It's down 3% of 1 basis point, or no, 30% of 1 basis point. So we're seeing a drastic amount of bond buying today. But also, if you take a look, you'll see that somebody is buying into the gold right now, too. And so what this shows me is that the fear is escalating because they look at bonds as a safe haven asset. And so they're buying in today. And that was their first gut reaction, was to buy into bonds as a safe haven. And they've been doing that. They've been scared. But the scare level and the fear level is intensifying. We're seeing it a little bit of spillover into gold, but only a little bit just yet. They're not really completely frightened yet. Believe me, it's coming. If the Fed doesn't blink soon. Now, let's take a look at the U.S. dollar. And we're looking at 96.69. It's down a little bit this morning. Now, the dollar, ultimately, is not going to be all of this heat that's going out there. I know they've been flocking into the dollar because it's the best one of these fiat currencies. And they're all garbage, but it's the best one. And they're actually looking at it as a safe haven asset because they figure in their mind, where else are you going to go? They say. That's what they actually say. They say, where are you going to go except for the dollar? There's no place else to go. So they're running into the dollar. But what they don't realize is this crisis is going to be so bad that's coming. In the end, they're going to run out of the dollar. And they can't see that. They can't see that there is other places to go. Gold, silver, and cryptocurrencies. That's the other place to go. And it's going to take them a while. By the time they see that that's the other place to go, everybody's already going to be there. Isn't that the way with it, how it works in life? I mean, by the time you spot some job opportunity or some new way of making money or whatever, everybody else has hopped on top of it already, and they're already there ahead of you. And that's going to be the way with these people who are investing into the dollar and stuff, and they can't see any other alternative. There's only the dollar. By the time they see these other alternatives, which right now are suffering, by the way, everybody will be already in there, and they're going to have to pay top dollar for whatever they're going to buy in these alternatives to the dollar. They're going to have to pay massively amounts more. Anyway, listen. Thank you guys for listening. The markets are starting to get a little bit exciting now. It was a little bit dead and slow and whatever there for a few weeks. This morning, this was a bit of a refreshing excitement coming into the markets, but not really all that great because it could lead to something that's really bad later. You know, I mean, ultimately, if the markets continue to crash, if they don't turn around, or if the Fed doesn't do something to help this situation. Listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye-bye, guys.